Many stocks in focus, so let's get straight down to that. Apollo Hospitals continues to be the big mover after yesterday's commentary from the management as well. This stock is moving higher by about 1.5%. Asian Paints, Eicher Motors, HDFC are a couple of other stocks that are looking good this morning. Bajaj Auto is trending higher. These are looking like a good set of numbers. Total sales growth of 29%, domestic sales up 103% year on year. And exports continue to be under pressure, but the numbers are largely in line with what the street was estimating. So the stock is up almost about 1% on Bajaj Auto. On the downside, though, just want to mention a few stocks. Coal India, of course, Nigel was mentioning that earlier on the OFS, down about 4.5%. Kotak Mahindra Bank down 2.5%. Bharti Airtel down 2%. Britannia down 1.5%. So these are the stocks that are dragging the market. IndusInd Bank, Maruti, NTPC, ONGC are a couple of other drags as well. Maruti and M&M, not great numbers expected this time, especially on Maruti. So, the stock is just a bit tentative ahead of the market, ahead of the sales coming through. But otherwise, you'd have to say that it's not a bad opening. It's flat with a bit of a positive bias. It's the bank Nifty that's dragging this morning and preventing the Nifty from getting above that 18,600 mark. The bank Nifty now down about 83 odd points, but a lot of individual stocks in focus this morning.
Well, that's right, Sonia. Let's pull up a few of those names. And Moil is higher. They've increased, fines prices by close to around 10%. That is more or less on expected lines given the way the international prices move. But low volume counter, that stock is up close to around 2.5%. You have South Indian Bank among the top volume gainers. That's up close to around 2.5%. V2 Retail as well. That one's up close to around 5% in the initial few minutes. I'm not sure what's happened out there, but V2 Retail is another stock that's up. Suzlon Energy continues its good run. That's up close to around 2.5%, now a 12 rupees stock. And NMDC Steel as well is a little bit higher. Lotus Labs, they'll be picking up additional stake in one of the companies for around 80 crores. So that stock had opened up mildly in the green as well. And Spandana Spurti, part of the founders, well, they're looking to sell close to around 14.5% stake as per reports. So Spandana Spurti as well should come up for you on the screen. On the downside, well, as Sonia mentioned, Kotak Mahindra Bank is giving back last evening's adjustment. Towards the end of trade, it adjusted because of the MSCI flows. Today, it's realigning itself. Coal India as well, owing to the OFS. And let's pull up Gujarat Gas as well as GAIL. Both of them will be reacting to news that Saudi Aramco has cut its June propane price by around $105 per metric ton. So both of them, in fact, have opened up a little bit lower. HIL, the operations at Chennai plant has been halted because of a strike out there. So that stock as well, I think, had opened up on the back foot. Prashant.
Nigel, yesterday was the second largest cash market volume day. And it's too early, but right out of the gates, things are looking a little quieter this morning as compared to, same time yesterday or the last couple of days as well. So we'll see. But it's interesting, and we were saying this in the morning, SGX in the morning at about 8:20, even before that, after that as well, was indicating a 60-odd point cut. And successively through the course of the last 1 hour, the gap kept narrowing and the open is in the green. So we are marginally higher. 18,546 is where we are at. Now, just a few other names, right? I mentioned PNB Housing as one of the financials which was very strong yesterday. It's got follow through this morning. It's up another 3.5% after yesterday's sharp up move as one of the top volume names this morning. Indus Tower should come up on your screen. It's up 3.5%. It is number one in terms of volume price action. Adani Green is coming up with a 3% gain, 1,005 on Adani Green. What else? Adani Transmission is up about 5%. I think that's the limit, and it's there. Adani Wilmar is up 2%. So lots of Adani names buzzing again. LG Equipment is up about 3.5–4% or so. Another one of yesterday's big movers from the financial space, Arman Financial, is up another 2.5%. I think it was up some 8–9% yesterday. So two, PNB and Arman are follow through from yesterday. Moil, Nigel mentioned, Signed is up about 2.5% as well. Volumes, though, are still, picking up, and they I guess, will pick up. Coal India and Kotak, of course, we've been highlighting. Bharti is down 2% at about 833. Stocks under some pressure. Zomato is down 1.25%. And Sonal, of course, was highlighting gas companies. Gujarat Gas is taken a knock of 3.5%, just under 490. Torrent Pharma and Indigo are some of the other names which are down 1.25%. Sonia.
Just want to Mention one word on Bajaj Auto since the numbers came in just a while back. These are looking like a very strong set of sales. So it's a third straight month of an improvement in overall sales for Bajaj Auto. And this is led by the domestic sales growth. So domestic sales have doubled year on year. And if you're wondering about exports, exports are under pressure. But exports also have improved for the second consecutive month. So there's definitely traction that you're seeing. And that's perhaps the reason why the stock is also up 1.5%. We'll, of course, hear from the management in a bit. But these are looking like a good set of numbers.
I mean, the management has been telling us, Sonia, right, the last couple of months that successively things will get better, even on the export side as well. So the management coming up a little later. Mahesh Patil is joining us now, Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Mahesh, good morning. Good to have you with us here as always on CNBC-TV18. What's the overall portfolio thrust now, Mahesh? I mean, across funds at Aditya Birla and fund managers, I mean, how are you thinking about markets and opportunities ahead?
Yeah, good morning, Prashant. So I think the markets, I mean, done pretty well in the last couple of months. I think the fear, about where the bottom is going to be, I think that is behind us. I think markets clearly have bottomed out, and progressively we've seen even the global markets slowly inching higher. But I think the market overall, we don't see a big upside really from a near-term perspective. I think it's going to be more stock specific now from here on. And we've seen that, right, post the quarterly numbers also in the last couple of months. The individual movement in stocks has been much sharper, and the breadth of the market also has been much better. So I think it's really from a portfolio action point of view, it's stocks which can outperform the market over the next 1 or 2 years. I think that's where the focus will be. And as I've been mentioning earlier, we've pretty much really focused on the domestic sectors in a big way, be it banking and financials, the auto sector, the industrial capital goods sector, the real estate sector. All these sectors are showing signs of improvement. We don't see any major stress or slowdown over there. And I think this year, while the overall headline top line growth will be slightly muted because we expect that yesterday the GDP number came into a very reasonably strong numbers over there. But I think the nominal growth this year could be slightly lower. It could be to large extent driven by margin improvement on the back of lower commodity prices. But overall, I think we are seeing a fairly decent earnings growth even in FY24. I mean, FY23, we ended with around 13% nifty earnings. But we expect a similar growth next year. So I think the market should be steady. Upset, probably room for upset from here because the valuations have now kind of moved up. Our market is slightly above the long-term average. We expect the returns to be, at least with the headline nifty, to be slightly muted. But I think broader strength should continue.
Okay. How are you feeling about some of these pockets where data has been improving over the last couple of months? So we were just making a mention of the auto stocks. The first tick has come out, I mean, the first data point from Bajaj Auto, but it's looking pretty good. Domestic sales have recovered. Exports are not as bad as they were about a couple of months ago. What's your own sense of, these pockets? Do you like them? Is it a good investment opportunity now?
The auto sector, we've seen that the commercial vehicles were doing well. And even in the upper end of the auto sector, like the premium vehicles, both in four-wheelers and two-wheelers, were recovered early. It was the bottom of the market, which was still weak. And mainly because we've seen the rural demand, got impacted last year and is still recovering from that. But I think there are early signs now. We are seeing a recovery in the rural side. The rural wages, now real wages, have started to improve in positive territory. And I think in the next coming months or next quarters or so, I think if the rural demand picks up, I think you will see the especially two-wheelers, which have been still weak. I mean, they're still probably 5% below the earlier pre-pandemic peak. I think that could see a revival going forward. And we are, slightly constructive on the overall rural demand. We believe that as we move into the end of this fiscal year, second half, looking at elections next year, and this is a pocket of the market, where the government will probably try to do something and provide some stimulus. So I think that should aid overall auto sector going forward.
All right. Hi, Mahesh. Good morning. Mahesh, what about the IT space? Challenges are clearly still there. The stocks, though, have been holding up despite rather weaker than expected numbers. What's the call from here on? If you're looking at it from a longer time frame, does it make sense to get into IT now?
Yeah, so IT sector, again, it's to some extent taking cues from what's happening globally, right? We've seen the NASDAQ also do fairly well. Global IT names have also seen a significant up move in the last 1 month specifically. Though we think that this quarter would still be weak, at least probably this is a quarter where you will see the overall outlook or the guidance probably bottoming out over there. And so I think to a large extent, market is factoring that this year will be a slowdown. You will see, especially for the top IT companies, the growth will be somewhere in the in the mid-single digits or so. But I think structurally, I think we still believe that the overall spend on digital, right, which is started around 2-3 years back, I think that will continue. There is some amount of cut in terms of the discretionary spend this year, but I think that will normalize next year. And I think yeah, given that, I think this will be I think next probably 3 months would be a good time to really slowly increase weight in the IT sector. So I think I mean the valuations there have corrected now, though they would still be slightly above the pre-COVID levels. But I think looking at we still believe that the growth in the IT sector, barring this year, would still be higher than what it was the pre-pandemic levels. And that would mean that the slightly higher multiples could sustain. So it could be a good contra play, especially slightly with the medium to long-term view, I think. But I think spreading it over the next 3 months, I think would be ideal time to really accumulate some of the IT names.
Mahesh, do you guys have a fund giving exposure to the NASDAQ?
So we have a fund, yes, exposure to the Nasdaq, and I mean, 2-3 months back, I think that thing was clearly when the Nasdaq was down. I think it was a good opportunity, and quite a few investors really looked at that as an opportunity to increase their overseas exposure because currently there is a constraint in terms of overseas investment, right, for the mutual fund setting. But I think the passive fund like the Nasdaq is where the option is still open for investor to participate. But I would still caution there. I think we've seen a decent rally on the Nasdaq at this point in time. I think while the US slowdown has slightly pushed back a bit, a couple of quarters, because US underlying growth is still very strong, but there is going to be some disappointment, I think, later in this calendar year. So I think one would slightly be cautious and not really get carried away by the recent rally, what we have seen in some of the IT stocks globally.
30%, for 5 months' work, right? It's just incredible what we've seen in the Nasdaq. But thanks to the largest 6 stocks, that's it. But I mean, returns are returns in that sense. But point taken, Mahesh. Just a very brief word on financials. Many are talking about interest in smaller pockets within financials. Microfinance is a theme, comes up more and more when we speak with investors. These are smaller areas for very large funds like what you run. You of course need exposure to larger ones as well, but is it spreading out across the financial space? Interest, not just top banks, but broader areas as well, like MFIs.
So in the last couple of months, we've seen as concerns about interest rates, right, peaking out, and the markets got a feeling that rates hiking cycle is behind us, and you could see rate cuts not immediately, but down the line. I think that has led to the focus coming back to the NBFC sector as a broad base. It underperformed the banking sector last fiscal year. I think this year you would see some of the NBFCs starting to gain leadership in the overall banking and financial services space. And there again, I think a lot of the second-tier NBFCs are now getting traction because they were pretty much kind of subdued. They were quoting at valuations probably below their long-term averages. And overall, I think the demand side on the asset side, the growth has been fairly healthy, especially on the auto sector. If you look at is picking up, consumer, the personal lending is also now picking up. Mortgages have been growth has been fairly strong. So I think that is, and especially about the microfinance sector, again, that's a sector which we are positive on. And that had gone through a bad cycle post the pandemic and took some time to recover. But I think in the last 1 quarter, we have seen the overall recovery is there. I think they have been fairly good, and growth is again coming back into the space. So I think this year, I think you will see a lot of NBFCs probably do out much better than what they did last year. And related to the banks, I think you could see a better returns in the NBFC space, at least in this fiscal year.
Okay, all right, Mahesh, thanks so much for stopping by, giving us your take on a whole host of sectors. Wishing you a good day ahead. But let's get in another corporate, and that one really talks actually to media. We have EID Parry. They are the stock on our radar. For Q4, the company saw a dip in distillery margins, while sugar revenues also declined a little bit. However, sugar margins witnessed some bit of an improvement. To understand what's the way ahead, Mr. Muthaiah Murugan, the whole-time director as well as chief executive officer of the company, joins us on the show. Hi, good morning, sir. Thanks so much for joining in. Well, let's focus on your distillery segment itself, because that seems to be the growth driver. Could you tell us how many liters of ethanol you sold in the last year? And how many will you sell, say, in FY24 and 25, given that you have additional capacities that are coming on stream? And also decode this for us. Top-line growth is coming, but margins are dipping. Why is that?
Sure. Very good morning, Nigel, and thank you so much for having me on the show. So with regards to the distillery sector, we sold just over 10 crore liters of alcohol this year, and this will move to 14 next year. And in the subsequent year, it will move closer to 17. We have capacity expansion, which is coming on stream. We've just actually commissioned a new distillery in Andhra Pradesh in Sankili. That's a grain and molasses-based distillery. And we also have two new distilleries, one capacity augmentation at an existing plant, and one new brownfield distillery as well coming in next year. So that will consistently take volumes up over the next 2 years. In terms of margins, I think we have suffered this year because of higher input costs, and I think that's one reason. Although of course our volumes have grown. Secondly, there is a transfer pricing element. We transfer molasses at market prices when we do our accounting. So to that extent, some of that profitability will get reflected in the sugar segment. But we are encouraged by the distillery, by the ethanol opportunity, and we're certainly encouraged by margins, and we're doing a fair bit to improve our operating parameters and efficiencies going forward.
Okay. Mr. Murugapan, good morning, and thank you for taking the time out and speaking to CNBC TV18. I hope you speak more often to us in the months to come. Just a follow-up here. You said that margins have been disrupted because of input costs. The margins by the end of the year in the distillery segment are in low single digits, just about 5%. Do you think you can get back to double digits in FY24A? And once all your new capacity comes on stream post the expansion, then what kind of revenue potential do you see?
So I think we will certainly see margin accretion going forward as we've also significantly scaled in this segment. 2 years ago, we were just over 200 kiloliters per day. Now our capacity is about 475, and this will go closer to 600 in another 4 quarters' time. So we're also building our familiarity with this business, and I'm sure as we scale, we will build our efficiencies, and we will build better operating parameters. So I'm confident about margin accretion in the coming quarters. In terms of revenue, the year which has just concluded, it probably about 600 crores to the top line. This will move to around 950 in the subsequent year, and after that it will move closer to 1,200. In terms of our capacity expansion, as we move to 600 KLPD, which is just north of 18 crore liters of alcohol, we should be at that 1,200 crore mark in terms of contribution towards overall revenue.
That is 1,200 crores is by FY25, correct?
That's correct, yes.
Okay, and this, the contribution from the distillery segment, what will it be? Currently, it's about 20% of your revenues, 22%.
So this will move
after
closer
the expansion
to,
comes, yeah.
Yeah, so in 2 years, we will be closer to 40%, between sort of 35 and 40.
Mr. Murugapan, good morning. Let's come to the sugar segment. Out of the 6 million tons allotted for exports, sugar exports, could you tell us what was your quota? How much have you sold till now?
So in the financial year which is just concluded, we were given a quota of 80,000 tons. We have fulfilled all of that. This is in the sugar year. So these quotas typically get allotted around the September-October timeframe. Of course, from the previous year's quota, we had some sales as well. So for the fiscal year, we sold about 1.5 lakh metric tons. We exported 1.5 lakh metric tons.
Okay, all right. In this business, in the sugar business, margins have expanded. Could you tell us what is driving that, and what is it likely to look like in FY24 for the sugar business?
Sure. Sure. So, Prashant, margins have expanded. I think the export program has been very gainful. And I think to give you a perspective of realizations, our realizations when we export is about 36 rupees per kilo. Prevailing trade prices are almost 3.5 rupees below that on average. So that has been certainly helpful. We also close to 30% of our sales goes into the retail segment, where again we get close to 36 rupees realization. So we get about 2.5 rupees incremental delta from trade price because because of the branded segment we are able to sell into at a premium. So this has really helped drive realizations and sugar margins.
All right, Mr. Murugan, you have given us a fair idea about your operational performance. But, your shareholders will be wondering what you all doing with the stake you all have in Coromandel. I need to put this across to you all because a couple of years ago, you all went and trimmed that position by around 2%. And that perfectly coincides with your interest costs coming down as well. So you'll have done some deleveraging. Could you tell us with the remaining stake, what you all plan? Do you all plan on paring some kind of stake in your holding in Coromandel?
So, Nigel, there's no discussion as such. I think the focus is to strengthen the standalone businesses of VID Parry. I think you will notice that the standalone sugar and distillery business has been turned around. We had pretty rough weather in the last decade, and now we're back to EBITDA per tons going closer to 600, op profit also moving closer to 200 crores. So that's the focus. We do have to fix some other parts of the business. We have a large refinery business wherein we have a lot of headwinds, and we sort of have a nutraceutical segment wherein we are subscale as well. I think the focus is on now turning those around and putting them on a better strategic path.
Okay, so as of now, no plans of paring down further stake in Coromandel?
No.
All right, and also, just a quick number on your standalone debt, because you're undertaking some capex, but your interest cost has come down nicely. So what is the outstanding standalone debt as of now?
So we have, so there are some there's an agri loan component. So I think the standalone debt is around, I think is around 600 crores. But there is an agri loan component over there. So that is quite short term. There is some long-term debt. We have given a line of support to the subsidiary PSR IPL, which is the refinery business. And that's about 200 crores.
Okay, so 200 crores of long-term debt, and you said short-term debt is around 600 crores, right, on the books?
Yes.
Okay, this assumes importance also because you have that capex plan going, I think to the tune of 150 crores is what you've already spent. What would the incremental capex be to, get this entire expansion through? And will that be putting any further pressure on your debt?
So the current distillery expansion and I think, Sonia, to your point, there's also an element of the expansions which we've undertaken on the distillery side. That is also, there is an interest subvention on this debt as per the biofuels policy. In terms of the capex that we're undertaking to expand the distilleries, about 275 crores in the current year for the expansion of 2 distilleries. That's work in progress right now.
All right. Appreciate your thoughts. Thanks a lot for giving us a lot of numbers as well as the way forward for the company. And thanks for stopping by on CNBC TV18. Well, that's VID Parry. The street definitely likes what they're hearing. The stock is up about 3.5%.
Yeah, from flattish, when we started, it's up. It's moved up to the high point of the day. I just want to highlight one more name, which is a new addition. Apollo Hospitals is now the top volume-led gainer across the board. It's up 3.5%. The stock was lower after results yesterday were a little underwhelming. We had the management with us in the morning, same time yesterday, and they did guide to a 15% revenue growth in 24 after a 13% revenue growth they saw in FY23 and improvement on the bottom line as well. 20% growth at the net level is what they guided for. They did talk about being hopeful once again of achieving that stakes hill in the healthcare business by the end of the year as well. That's a strong move for a large name, 4% for the largest hospital chain in the country. So that's one. Naukri, that is InfoEdge, is another one. These were not there when we looked at the gainers board in the morning. Naukri, that is InfoEdge, is up 3%. It's a strong one. And then PNB was there. It's up a little bit more, 5.5%. But look at Sobha. Sobha has come into the mix as well. And Sobha is up a full 4.5%. So a lot of momentum coming through in these single stocks across the board. Nucleus, I mean, my God, what a move for the last 3 or 4 days now. Just completely uninterrupted. And Nucleus is once again up about 7% or so. This week, Nucleus Software is up 35% and counting, with 1.5 days still to go as we wrap up. Well, let's take a quick break here. Rakesh Sharma of Bajaj Auto will be with us to talk about their very strong set of numbers for the month of May. And a little later after that, we'll have the management of GMM Pfaudler to talk about their earnings and the outlook going forward. Stay tuned.
Welcome back to Bazaar Morning Call. Just wanted to spot a couple of stocks in case you missed out on all the action in the last 1 hour. Bajaj Auto is now one of the biggest Nifty gainers, up 1.5% after reporting a very good set of numbers in the month of May. The numbers are largely in line with estimates, very strong in the month of May, led by the domestic volume growth. It's the third straight month of a month-on-month improvement, as you can see on the graph on your screen. And the domestic sales have doubled year on year. Even if you look at exports, right, exports continue to be weak. Sales are down about 20% year on year. But month on month, there's an improvement. And if you remember in the last conversation that the management had with us, they said that July onwards is when they're expecting exports to recover in a big way. So we'll try and touch base with the management in a bit. For now, the other set of numbers that just came a while back are escorts. And looking pretty good, actually. The total sales growth for escorts this time has come in at about 8.9%, largely led by domestic growth, which is about 13.5%. But the management commentary is positive. They say the macroeconomic factors and farmer sentiment remains positive, resulting in a good sales trend across most geographies. And they expect this current momentum to continue in the near term, led by a normal rainfall forecast, adequate reservoir levels and better liquidity. So the numbers that have come through so far from the auto space have looked pretty good, whether it's the two-wheeler pocket like Bajaj Auto or even tractors.
Absolutely. Just one more name, a few other names, right? Look at something like Ashiana Housing. Out of the blue, it's up 14%. I don't know if this is numbers reaction, but 196 on Ashiana Housing. We don't talk about that, at least not in the morning, but it's coming up with volume, so it's up on your screen. Himmat Singha, I was mentioning these textile names, Arvind, Himmat Singha, Gokuldas, all did well yesterday. Himmat Singha is up another 4.5%, nearly $100 now on the stock. You got Amar Raja Batteries, which is up 3.25%. NRB Bearings, I mean, that's another one which is up 5%. Follow on after yesterday's 6% move on NRB. So a lot of these are just follow on moves, strong momentum. Sula is up 4% as well. So looking pretty, the move is broadening out as it has been the case for the last so many sort of days now. Mid cap, small caps, a lot of action there. Coal India is under pressure. It's down, I think, about 4% or so. Nigel, what's happening?
Well, Coal India, we had the news that they have announced a hike on part of their FSA sales, right? Close to around 30%. The government has done the wise thing. They've come ahead the next day and they've said we want to sell, close to around 3%, which is broken up as 1.5% that's going to be offered. And there's a green shoe option of another 1.5%. So in totality, it'll be close to around 3%. And at 3% at the base price of around 225 rupees, they will raise close to around 4,160 crore rupees odd. The reason the stock is under pressure is because of the discount. The OFS has been offered at a base rate, which is a 6.5% discount to yesterday's close price. So that's the reason why the stock is under some pressure. Valuation-wise, well, things are in their favor. On a trailing basis, trades at around 5 times EPS, which is good. But this year is unlikely to be as good as last year, though they've been paying good amount of dividend yield as well. So going ahead, you'll have valuations that have always been the comfort zone. The problem is that e-auction prices have corrected, international coal prices have corrected. That's the part of their business which is around 15%, and they get bulk of the profitability from there. So if international prices fall, e-auction prices are under pressure, which is a bit of a risk to their earnings. And the second factor is, yes, they've gone ahead and increased prices, but there's unlikely to be any further price increases because general elections come about. So now the remaining hikes will only be post that. And for the time being, the higher prices will take care of only 50% of the higher employee costs. So that's the reason why the stock is under pressure, OFS.
Okay, the OFS dragging the stock lower, but one of the big movers in the frontliners is Bajaj Auto. As we just mentioned, May sales are looking good, come in above Nomura's estimates, driven largely by domestic sales, which have doubled year on year. However, exports continue to witness some pressure year on year, although month on month there is an improvement. Rakesh Sharma, Executive Director at Bajaj Auto, joins us now to talk about that. Mr. Sharma, good morning and thanks as always for being with us on the channel. It was a strong showing in the month of May, largely led by the domestic sales. But can you give us a sense of what the retail sales have looked like and what is the expectation as we head into June and July?
Good morning, Sonia. Yes, the May outcomes have been quite good, particularly in the domestic business, driven by our performance in the 125 cc plus segment. The growth rates are looking astronomical because, last year we had started having our supply chain issues in the domestic business. So I would sort of not go by those rates, but sequentially also, I think you mentioned that, sequentially also the business has improved and it has taken very good strides in the target segment, which is the 125 cc plus. The industry is coming back since Q4, but I would say the industry is in low single-digit growth. We expect the industry to grow at about 3 to 5% in the next 2-3 months, and we should keep growing at probably perhaps twice that rate, and again driven by the top half of the industry. Even in the industry, the 100cc segment is either negative or nil, and the 125cc plus segment is recording double-digit growth. So that's a very good tailwind with our portfolio in position in the top half. That gives us a good advantage.
Okay, so you're saying that the overall industry will grow just about 3 to 5% over the next 2 to 3 months. And Bajaj Auto could grow at twice the rate of the industry. Got that? What does this mean in terms of market share? Because you ended FY23 with the domestic market share at about 17.3%. And both in the sub 125cc and 125cc plus bikes, you saw a little bit of a decline in market share. But now at the end of May, where does it stand at on the domestic front and what's the target?
See, the market share is a blended market share. We last year lost market share in the below 100cc and below segment, but we gained market share in the 125cc plus segment. We are looking at the Vahan, our market share from the Vahan lens, not from billing or dealer reported retails. This is registrations. And in April and May, we've made very good strides in the 125cc plus segment, crossing the 30% plus market share. Whereas the 100cc segment, we continue to lose, about 1% or so, 2%, even in April, May. So at an overall level, we would be at about 18% plus, with 30% plus, about 32% coming from the 125cc plus segment. And I would say that this trend should continue into the quarter.
Mr. Sharma, hi, good morning. How did exports do and how is it looking now? How many units did you sell, for example, in Nigeria? You've been guiding for gradual improvement in some of these overseas markets as well. So what's the picture like now?
Yeah, like I've been saying, exports is a story of very incremental improvements. And we are very happy about that because at least it's the decline has got arrested, and I'm talking in retail terms. So, April was better than March and in terms of retail, and May has, all the numbers are yet to come in. But when we last did a sort of a dipstick, May was looking better, marginally better than April. That's a very good thing. Nigeria is looking every month better. The demand on the ground is improving, but what sort of mutes the export is the uncertainty still, or the availability of US dollars for trading. That is improving, but still very slow. We would think that if there are no further disturbances, probably, we are seeing some kind of an equilibrium being reached. Central banks in various emerging markets becoming less cautious. They are very, very cautious at this point of time. So allocating very little foreign exchange for trading of products like motorcycles and three-wheelers. But hopefully that will start to loosen up a little bit. And like I've been saying, we hope to see some substantive improvement in Q2 onwards. The restricting factor is now the availability of foreign exchange. Demand on the ground seems to have digested the higher prices which were caused because of devaluation, and it is sort of started to look upwards.
So when do we see Bajaj Auto get back to over 2 lakh of export wholesales? I mean, for the last 5-6 months, you've been trending at around 1.1 to 1.2 lakh units in the export market. Now that recovery is playing through in its entirety, when do we see you get back above 2 lakhs?
If you can help me with when the central banks will start to take a little bit more liberal stand on that, I'll be able to answer that question. Like I said, the demand is improving. It's not yet gone back to the, 21, 22 levels. But this quarter will be better than last quarter in terms of retails. But the stocks are thin. Now, it depends on how, US dollars are available for trading. Now, you see 90% of our business was on cash terms a year back. Now 90% of the business is on letter of credit terms, which have a different level of controls. So a lot of it depends on that. Things are improving, but at a very slow pace. That's why we are saying, not for any specific, from any specific inputs, but just extrapolating this improvement, we are saying it might take up to Q2.
Okay, it might take up to Q2. Just to come back to Prashant's question on what's happening in Nigeria, I remember you told us, way back in February, Nigeria sales used to be just about 3,000-4,000. Then that improved to almost 30,000 in the month of March. Where are we at now in May? And when do you see complete normalcy return, say, in a market like Nigeria? If you can just give us the numbers.
So, March was, I think, about 26,000 odd, and April was 28,000. And I expect, May to have been about 30,000 plus. We are probably going to get the numbers later in the day. And so that's a good improvement. When Nigeria was at its peak, it was doing 50,000. The issue is, again, like I said, the availability of foreign exchange. I think the stocks are now very thin. The transition of power in the government at the government level is proceeding and going off smoothly. And some of the restrictions which demonetization had imposed on the customers and the general public, they have been sort of rolled back. So life is coming back to normalcy, and that is what is driving up the retails. I'm hoping that these foreign exchange availabilities improve, because otherwise the demand by May, June, July will be crossing 30,000 for us, 30, 35, 40,000, but we may not have stocks on the ground. So that is what we are pushing for now.
Mr. Sharma, we wish you all the best, and hope things, especially on exports, keep improving. You said at the peak, you used to sell 50,000 units in Nigeria. Hope you get back to that. You said you did 30,000, right? In the month of May.
I don't have the exact figure, but I would expect it to be around that. Yeah,
around that. All right. Good luck. Thank you very much for joining us, sir, and of course running us through what the picture looks like. Well, the market is inching up. We're up 42 points on the Nifty, 18,580 or so now on the index. Well, let's continue corporate conversations. A strong performance coming in from GMM Pfaudler in the fourth quarter. India business saw a healthy 30% growth, while their order intake is also looking good. It's increasing. And the company says they're on track to meet their FY25 guidance as well. Tarak Patel is Managing Director at the company. He's joining us right now to take some questions. Tarak, good to have you with us here. Thank you very much for your time. You know, in the earnings presentation, you outlined that you basically will need to grow revenues at about 14% to reach your FY25 top line numbers. And of course, you put out a margin of EBITDA number as well, which should grow a little over 20%, 22% or so. But this implies that EBITDA margins will go up to about 17% from the current 13.5% by FY25. So I just want to start by asking you, how will you achieve that? How will you go from 13.5 to 17% in the next 2 years?
Yeah, so the guidance that we've given for 2025 is 3,700 crores of top line and 630 crores of the EBITDA margin, which obviously translates into 70%. So I think we are definitely on track to meet the revenue target. We will probably achieve the revenue target much quicker than expected. On the margin front, we are definitely on plan as well. So we did about 430 crores of EBITDA, next year around 530, and then obviously 630 the year later. We are seeing a bit of, let's say, headwinds in the chemical and pharmaceutical markets at the moment, but we do believe that this should turn around quite quickly. We do believe that the reordering cycle in pharma especially will start picking up maybe by the end of this calendar year as well. Internationally also, we are working on multiple different initiatives that will help us also improve the margins. We're seeing also a cooling down of input costs, right? So metal prices, energy costs, some of the chemicals that we use for the glass lining process are all stabilizing and reducing as well. So this should also have a positive impact. On top of that, I think, our technology, our market, the position that we have will definitely help us improve the profitability. And I think going forward, we are quite confident that the margins that we have kind of guided for should be very easily achievable. You're
saying you will be at 17% by FY25. Mainly input costs cooling off and market positioning, which gives you an advantage, I'm assuming some pricing power.
Sure. So we said that we'll be at 630 crores and we will be at 630 crores. Is that going to be 17%, 16.5%, 17.5%? I'm not too sure, but 630 crores is definitely something that we will achieve.
So you are also ramping up your non-glass lined equipment business, right? Through new acquisition, some expansion as well. Tell us a little bit about the inorganic plans. Any more on the cards in this calendar year itself?
Yeah, so we did 3 acquisitions last year. We acquired a company in France called Mixel, which is into agitation. We acquired a small engineering company in Italy and a US small services company as well. So mixing for us is something that we are focusing on. We are trying to create a global brand in the mixing space. Mixing, as you would know, goes into multiple range of industries. Besides chemical and pharma, it really diversifies our the portfolio as well. So mixing is something that we're really focusing on. It's the technology play. So the margins are as good or even better than glass lining, right? So that's a focus for us. We probably are looking at one more acquisition in this space in the US market. So I think once that gets done, I think we can consolidate the mixing, the portfolio and really create a global brand and then push that and try and grow that brand into something that's quite large as well.
So when you say one more acquisition, what is the kind of money that you have, laid out, the kind of war chest that you have for these acquisitions? And will it largely be funded from internal accruals, or would you be looking to take on any debt?
Yeah, so this is really a very small acquisition, $5-6 million range. So really not really going to make or break our financial position. So we should be able to do this from internal accruals. Usually when we make acquisitions, especially in Europe and the US, they are 4 times, 5 times multiple. So we buy them cheap. And then we try and use the Fodler network to really grow these small companies, right? So that's really our play when it comes to acquisitions.
Got it. Tarak, could you run us through what is the current order backlog? How is the pipeline looking into FY24? Is it accelerating at the margin compared to what you saw in FY23? And what's the percentage share you have in the glass-lined equipment business, and how do you see that going forward?
So our current backlog on April 1st was around 2,200 crores, which is about 12% higher than previous year. So let me just kind of break up the backlog. So our international business has a stronger backlog as we speak. It's about 8 to 9 months. In some geographies like Switzerland and in China, we have 12 months to 18 months of backlog, right? So we have visibility. In India, it's about 6 to 7 months. India, we are seeing a bit of a slowdown when it comes to chemical and pharmaceuticals. But like I said, I do believe that this is not really a trend. This should kind of be reversed over the next few months. From all the companies that we've been speaking to, they have plans for investment. I think pharma is now seeing a reordering cycle that will kick in as well. So I think both chemical and pharma in India will kind of eventually the turnaround, maybe by the end of this calendar year, or maybe earlier. So I'm not really worried about the backlog. We have enough of backlog to get us through the next 6 to 8 months. The idea is to really make sure that we have good quality backlog, good the margins as well, and that's what we're focusing on.
Okay, we leave it at that. Thanks a lot for joining us and speaking to CNBC-TV18. Appreciate your thoughts. Well, that's GMM Fodler. They're on track to achieve their revenue targets, and they're looking at some more inorganic acquisitions, some smaller ones in their business. For the overall markets, don't lose sight of what's happening. There's a buy on dip situation playing out at the moment. The mid-cap index is up almost 140 points, and the Nifty has also moved up to the high point of trade. Let's slip into a quick break. On the other side, Mitesh Thakkar will join in for some technical trades. Stay tuned.